Imagine waking up one morning and realizing that the market has quietly rewritten the rules overnight. The giant everyone thought was untouchable suddenly becomes just another stock on the board, while a little-known company, one you may never have heard of, has skyrocketed over 1,000% in less than 2 years. This isn't a rumor. This isn't hype. This is real, verified market movement that is shaking the foundations of how investors think about tech, AI, and the future of money. Today, I'm going to take you behind the curtain of a move that has the investment world buzzing. An extraordinary rotation from a massive e-commerce powerhouse into an AI company that's rewriting the definition of growth. And here's the kicker. It's not Nvidia. That's right. The real rocket isn't the one everyone talks about. The real story is happening elsewhere. And if you blink, you might miss the single most explosive opportunity of this decade. So strap in, because in the next few minutes, you're going to see why some of the smartest capital in the world is moving in a way that could change everything, and why timing, insight, and conviction are more critical now than ever before. When you look at the markets today, the first thing you notice is the sheer scale of transformation underway. We are living in a period where capital is not just flowing, it is rotating with precision, shifting from established giants to emerging engines of growth. In the past, it was enough to hold the household name stocks, the companies whose names appear in every headline, whose quarterly earnings are dissected in every financial media outlet. But the truth is that the markets have evolved far beyond that. Returns that were once considered remarkable have now become baseline expectations. The real opportunity, the kind that delivers transformative results, comes from recognizing when to step back from a long-standing position and redeploy capital where the next wave of growth is occurring. Take a company that has dominated e-commerce and cloud computing for over 2 decades. Its trajectory has been almost textbook in terms of revenue growth, operational excellence, and global footprint. Holding such a stock has historically been seen as a safe choice, and for good reason. But as any experienced investor knows, safety is often the enemy of outsized returns. There comes a point when the market's pricing, combined with your own portfolio's objectives, signals that it's time to be proactive. This isn't about skepticism toward the business itself. The fundamentals remain strong, and its position in technology-driven sectors is impressive. It's about recognizing that the marginal opportunity cost of keeping capital tied up may outweigh the potential incremental gains. The decision to reduce exposure to a large-cap stalwart is never made lightly. It involves rigorous analysis of revenue growth, operating margins, competitive positioning, and the potential for technology disruption. It is also about reading the market's signals, the subtle shifts in momentum, valuation compression, in areas where innovation is accelerating faster than public attention can track. When capital is redeployed thoughtfully, it can capture the extraordinary upside offered by emerging growth leaders, particularly those leveraging frontier technologies. Moreover, this is about discipline. Discipline in portfolio construction, discipline in recognizing when a position has delivered its optimal risk-adjusted returns, and discipline in resisting the gravitational pull of conventional wisdom. The reality is that exceptional returns often lie off the beaten path. They lie where others are distracted by familiar names or mesmerized by narrative headlines. By stepping aside from a giant with decades of market dominance and redirecting resources toward a high-conviction growth opportunity, you are not abandoning success. You are chasing excellence where it is unfolding most rapidly. Finally, it's about vision. Investing at this level is not about reacting to volatility or media noise. It's about anticipating where capital flows will generate the greatest future return. It's about understanding that true leadership in finance is defined not by the stocks you hold, but by the opportunities you seize before the market fully recognizes them. Every tactical move, every strategic redeployment is a reflection of that foresight, a recognition that growth is not static and that staying ahead of the curve is the only way to compound meaningful wealth over time. When you examine the landscape of artificial intelligence today, it becomes clear that opportunity is concentrated not only in the well-known titans, but also in those companies quietly executing, innovating, and scaling at an unprecedented pace. The market tends to focus on familiar names, the ones that dominate headlines and command investor attention. But the reality is that real innovation often takes place in the shadows, in firms that have built proprietary technologies, forged strategic partnerships, and positioned themselves to deliver outsized growth long before the wider market fully recognizes their potential. Identifying these leaders requires more than intuition. It requires rigorous analysis, a deep understanding of technology adoption curves, and a disciplined approach to measuring performance against market expectations. Consider an AI company whose stock has surged over 1,000% in less than 2 years. To most observers, such gains might appear speculative or headline-driven, but in truth, this performance reflects a disciplined, data-driven evaluation of where the market is heading. It is a manifestation of strategic insight combined with operational execution. The company's success is rooted in its ability to deploy advanced algorithms, capture significant market share in specialized niches, and demonstrate real-world applications of AI that extend far beyond theoretical promise. These are not flash-in-the-pan wins. They are evidence of sustainable competitive advantage, scalability, and alignment with some of the fastest-growing sectors in the global economy. What makes this even more compelling is the contrast with mainstream perception. While investors may be fixated on high-profile AI companies that dominate the conversation, the real growth engines are often elsewhere. The difference lies in timing and foresight, recognizing the companies that have the right combination of technology, strategy, and execution to accelerate rapidly while still being undervalued relative to their trajectory. It's a lesson in looking past the obvious, resisting herd behavior, and committing capital based on conviction rather than narrative. Furthermore, investing in such company, IES, demands courage and discipline. These are not the names that will appear on every news segment, nor are they the stocks that generate immediate media buzz. Yet for those who take the time to analyze fundamentals, technology adoption, and long-term potential, the rewards can be extraordinary. This approach requires patience, a willingness to tolerate short-term volatility, and the discipline to hold positions even when market sentiment is focused elsewhere. Ultimately, the lesson is clear. AI is not a monolith. Within the sector, there are clear leaders whose performance is measured not by hype, but by execution, innovation, and the ability to scale. Recognizing these opportunities before the market fully appreciates them is what separates exceptional investors from the average. It's a combination of analytical rigor, disciplined capital allocation, and a willingness to act decisively when the data points align. In a world where growth is concentrated in emerging technologies, identifying these under-the-radar leaders is not just a strategy. It is the key to capturing extraordinary returns in a rapidly evolving market. Even when a company has achieved the scale and market dominance of a global powerhouse, it is important to recognize that growth is never linear. Exceptional companies continue to innovate and expand, yet the market's attention often shifts before the company is fully matured in its potential. There comes a point where the returns from holding a large-cap stock, no matter how impressive its fundamentals, may begin to plateau relative to the opportunities emerging elsewhere. This is not a commentary on the company's performance or long-term viability. It remains a dominant player across e-commerce, cloud services, and advertising, but a reflection of the broader principle that capital must be continuously evaluated for its potential to generate outsize returns. Strategically, this is about recognizing the difference between stability and accelerated growth. Stability offers security, but accelerated growth delivers transformative outcomes. In a market that rewards innovation and execution, the ability to redeploy capital from a well-established company to emerging leaders in frontier sectors becomes a defining factor in building lasting wealth. The decision to reduce exposure to a market titan is grounded in an understanding of opportunity cost. When capital is tied to an asset whose upside is incremental, reallocating that capital toward a high-conviction growth opportunity can unlock returns that are multiple times greater. This approach requires careful analysis. It is not enough to simply identify a high-performing sector. The selection must be precise. Metrics such as revenue acceleration, market penetration, technology adoption, and operational efficiency must all align. The companies that deliver the most extraordinary returns are rarely those that attract the most headlines. They are the ones quietly executing on strategy, capturing market share, and scaling their solutions before the broader market fully appreciates the value being created. Moreover, this kind of portfolio rebalancing reflects disciplined thinking rather than impulsive action. It requires the courage to act decisively even when it might appear counterintuitive to the average observer. Selling a portion of a large cap stock that has delivered decades of consistent returns may feel uncomfortable, but it is a recognition that investing is not about sentiment, it is about maximizing risk-adjusted returns. Reallocation decision is informed by data, market insight, and an unwavering focus on where growth and innovation are truly taking place. The broader lesson is about forward-looking vision. Large, established companies will continue to play critical roles in the economy, but the fastest-growing opportunities are often in the emerging sectors that harness new technologies, reshape industries, and redefine competitive advantage. Identifying these trends early, understanding which companies are executing at the highest level, and reallocating resources accordingly is what separates average investors from those who consistently generate extraordinary returns. It is not about abandoning successful companies. It is about recognizing that the future of market leadership is dynamic, and positioning capital where it can capture the most meaningful upside is the hallmark of disciplined, strategic investing. In the end, portfolio decisions are a reflection of insight, timing, and courage. They are not reactive, they are anticipatory. The ability to shift capital from a dominant incumbent to a high-growth frontier company is a demonstration of strategic foresight, a recognition that opportunity is not static, and that true wealth is built by acting decisively when the data and the trajectory align. The landscape of artificial intelligence has fundamentally altered the calculus of investing. It is no longer sufficient to chase the companies that dominate headlines or enjoy broad public recognition. True opportunity lies in understanding where execution meets scalability and where innovation translates into tangible market leadership. AI is not a singular story. It is a constellation of technological breakthroughs, operational efficiencies, and market applications that compound to create exponential growth. Companies that harness these dynamics effectively are generating returns that dwarf even the most admired traditional tech giants, and recognizing this early requires both analytical rigor and strategic foresight. Institutional capital movements provide a unique lens into this transformation. When large SCA investors allocate substantial resources toward emerging AI leaders, it signals conviction based not on hype, but on fundamentals and trajectory. This is a lesson in disciplined observation. Extraordinary returns rarely emerge from following the crowd. They emerge from identifying companies that combine innovation with execution and that operate in sectors where adoption is accelerating faster than public perception. By focusing on these leaders, it becomes clear that the next wave of growth is concentrated in firms that are quietly capturing market share and redefining what is possible in AI applications. The magnitude of returns in certain AI stocks over the past year illustrates a core principle of high-level investing. The market is not always efficient in pricing innovation. Companies with superior technology and execution can experience dramatic appreciation before the broader market fully internalizes their value. This underscores the importance of being proactive rather than reactive, allocating capital where growth is real, measurable, and ahead of general market awareness. Timing in this context is as critical as analysis. Entering an emerging AI leader at the right moment can produce returns that redefine the trajectory of a portfolio, while late entry often means settling for incremental gains. Moreover, investing in high-growth AI companies demands patience, discipline, and a tolerance for volatility. The sector moves quickly, and prices can swing based on sentiment as much as fundamentals. But for those who maintain conviction grounded in careful research, the reward is disproportionate to the risk. It is the difference between following the narrative and understanding the story being written by the market itself. Capital deployed in this way is not chasing a trend, it is positioning for transformative growth that will define the next decade of TF. technological progress. Finally, this is about vision and execution converging. AI is reshaping industries, redefining competitive advantage, and creating companies whose impact will be felt for years to come. Recognizing these leaders requires disciplined observation, strategic allocation, and the courage to act decisively when the data points align. Those who succeed are not simply reacting to the headlines, they are identifying where performance, technology, and timing intersect, and they allocate capital in a way that reflects a long-term view of opportunity. At the end of the day, the lesson is clear. The frontier of AI represents a unique convergence of innovation and scale. Extraordinary returns are captured not by following the obvious, but by anticipating where growth is emerging, understanding which companies are executing flawlessly, and committing resources decisively. This is how market leadership is anticipated, how wealth is multiplied, and how the next generation of opportunity is realized. The final consideration in understanding these market dynamics is the role of institutional insight in shaping broader trends. Capital moves at scale, and where it flows can reveal as much about the future of growth as any earnings report or headline. When a substantial allocation is made into a high-growth technology, particularly in AI, it is not an impulsive decision. It is a reflection of disciplined analysis, strategic conviction, and anticipation of where value is being created. These decisions are both tactical and forward-looking, informed by rigorous due diligence, careful evaluation of market trends, and a deep understanding of execution capability. Observing these movements provides not only insight into the specific companies involved, but also into the evolving architecture of opportunity across the sector. What sets apart exceptional investors is the ability to see beyond the immediate allure of familiar names. While household tech giants continue to deliver strong earnings and maintain dominance in their respective sectors, the fastest compounding growth often lies in companies operating at the frontier, those that are leveraging cutting-edge AI applications, capturing emerging market segments, and executing with precision at scale. Identifying these leaders requires a willingness to challenge conventional wisdom, to look past the most widely held stocks, and to focus instead on the underlying drivers of extraordinary performance. This is where disciplined insight intersects with opportunity, recognizing where innovation is translating into measurable results faster than the broader market has priced in. The remarkable appreciation of certain AI stocks over the past year highlights a critical principle of investing. Timing and execution are as important as strategy. Markets may lag in recognizing true innovation, creating windows of extraordinary opportunity for those willing to act decisively. This requires courage, analytical clarity, and the discipline to remain focused on fundamentals, even amid volatility and public attention focused elsewhere. The companies that emerge as leaders are rarely the most talked about. They are those quietly building capabilities, capturing customers, and demonstrating scalable solutions that have transformative potential. Furthermore, the strategic reallocation of capital from established giants to high-conviction growth companies underscores an essential insight. Investing is not about chasing popularity, it is about pursuing performance. Every allocation decision should be guided by the objective of capturing the greatest upside relative to risk. This is not reactive speculation. It is proactive positioning informed by rigorous research and an understanding of where value is being created in the evolving economy. It is the recognition that the markets reward foresight, discipline, and execution more than headline recognition. Finally, this is a lesson in vision, patience, and strategic audacity. Exceptional returns are not captured by following trends, but by anticipating them, by identifying leaders before their full potential is recognized, and by committing capital decisively when the alignment of innovation, growth, and execution becomes clear. The frontier of AI represents not only technological advancement, but also a generational opportunity for those prepared to position themselves at the right intersection of insight and action. Those who act with clarity, discipline, and courage in these moments are the ones who consistently shape outcomes and redefine what is possible in the marketplace. So here's the truth. The market doesn't always tell you. The biggest opportunities are rarely obvious. They don't come in headlines, press releases, or social media hype. They are quietly unfolding right under everyone's nose, and the investors who see them first are the ones who redefine what's possible. We've seen the shift. Capital moving from the familiar, the safe, the expected toward the frontier of AI, toward companies whose growth is exponential, whose impact is transformative, and whose potential is just beginning to be understood. The question isn't whether these opportunities exist. They do. The question is, will you recognize them before the market catches up? Because in this game, fortune favors the bold, the disciplined, and the visionary. Those who act decisively, who read the signals the world is too slow to see, are the ones who don't just participate in the market, they shape it. So here's my message. Stay alert, stay analytical, and above all, stay ahead. The future belongs to those who anticipate it, position for it, and have the courage to act when the rest of the world hesitates. And make no mistake, this is your moment to witness the extraordinary unfolding in real time. The markets have spoken, the signals are clear, and the next wave of opportunity waits for no one. The question now isn't if this move will matter, it's whether you're ready to understand it, learn from it, and harness its potential. Because one thing is certain, the game has changed, and the winners will be those who see it first.